Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and I'm speaking today with Oliver Turner, Vice President of Corporate Development at Karora Resources, traded on the TSX under the ticker KRR and on the OTCQX under the ticker KRRGF. And Oliver, always great to get you on the show to get an update on Karora Resources. It is a stock that I personally own, in full disclosure, so I'm biased in that sense, but I just think it's one of the more interesting stories in the space as far as a growth-oriented gold production story, as well as growth-oriented nickel production, and we'll get into that. But I just want to kick things off with the press release you put out in November, just updating the markets on the Q3 performance. You obviously had growth year over year as far as the production profile, but I won't steal your thunder. Just walk us through a general recap of how Q3 production went, revenues, costs, cash flow. Tell us how things are going at your operations in Australia.
Yeah, thanks, Shad, and always good to be back on here. It's been a busy few months since we last talked, and moving the assets forward, particularly Beta Hunt, has been very, very successful, and we're just at the beginning of the new year here, wrapped up a successful year as well again at the operation. So with the third quarter, obviously we don't have our fourth quarter results out just yet. Things are tracking very well, though. We can chat about that briefly afterwards as well. Third quarter was strong again, just under 40,000 ounces. That brings us to about 120,000 ounces over the first three quarters of the year, which puts us well in line to deliver that 145 to 160,000 ounces, which is our guidance for 2023. So from an ounce perspective, things tracking very well there. And again, the fourth quarter was moving along quite well. So good on ounces there. From a cost perspective, just under $1,200 an ounce US for the course of the year through three quarters. As a reminder, our guidance on all-in sustaining costs for 2023 was $1,100 to $1,250. So tracking right in the midpoint of guidance there, which is good. And again, the fourth quarter is looking good for everything to come in line in that guidance. So things are tracking very well from an operational perspective, from a cost perspective. Cash balance remains, continues to be healthy as we deploy into the asset, and things are looking good.
Well, Oliver, just as we look forward, I know you don't have the Q4 numbers yet, but when you think about last year, when you look at the year to come, could you just share a little bit more about the guidance you expect? Where will the growth be coming from? And how does that factor in as far as both the gold and nickel production growth?
Yeah, so 2023, as I mentioned, the gold production guidance is 145 to 160. The guidance that we have out there right now is 170 to 195,000 ounces for 2024. So a really, really big step up. I mean, if you go back several years, this asset was producing well under 100,000 ounces. So it's been a big period of growth for us over the last couple of years. At Beta Hunt, obviously supported for many of those years by steady production out of Higginsville as well. So next year is a big step up in terms of ounces. And of course, just like all miners, we'll refine our guidance as we put out our end of year and fourth quarter numbers in February, March of this year. But things are looking good there as we ramp up towards that targeted rate of being about a 200,000 ounce a year producer from 2025 onwards. So big growth coming. All of that is fueled at Beta Hunt. From the gold perspective, we're also going to see a transformation of the nickel operations over the next several years here, particularly with the growth of the 50C and Gamma block that we've talked about previously. That is a very large resource. We have about 34 to 35,000 nickel tons nits in resource there. And we know that that's going to be a larger nickel operation in the future. We're doing engineering work on that now to put some context around how big that can get. But nickel will be a increasingly important factor as this operation moves forward. And one of the key differentiators that we have there on the nickel side of things, obviously the nickel market over the course of 2023 didn't see lots of love and joy, but we're quite differentiated in the fact that we actually don't have any nickel processing facilities required. We are immediately next to BHP. So when it comes to constructing a large nickel concentrator and the associated costs there, we don't have those. We actually ship our ore right next door. It's 4 kilometers away to BHP. So the nickel operation is kind of viewed through a bit of a different lens at Beta Hunt and at Karora, because it truly is a mine within a mine without a processing requirement. So that positions us a little bit more competitively than the rest of the nickel universe right now.
Well, Oliver, let's just camp out there just for another second, because I think this is an interesting part of the Karora Resources story. Yes, you have the gold production, but you have this growing area of importance with the Gamma block, the 50C area, this high-grade nickel component, and you just talked about the advantage you have as far as operational, getting paid back on that nickel. But you've also mentioned in the past, and I'd love you to expand this for the audience, that underneath the nickel, you typically still find the gold. So everywhere you're finding all this nickel, there's also the pot of gold there underneath it. Maybe just speak to how this resource is coming together, because you did update the resources in November as well. How does the gold resource coming together here at Beta Hunt, and how does this nickel play into it and the future potential exploration for gold underneath the nickel?
Yeah, you're absolutely right. Well remembered. There is not a single occurrence throughout Beta Hunt, and that's across 8 or 9 different shear zones, which are these vertical ore bodies that basically have these nickel troughs that sit on top of them. So either you always have gold sitting underneath your nickel trough, or vice versa, nickel trough sitting on top of your gold. And that's been the case for more than 40 years that this operation has been around. Nickel was previously mined. Obviously, we're mining the gold underneath the nickel now. And then all of these new shear zones that we've been adding, and which are going to be contributing to the resources going forward, Cows Hill, Mason, Larkin, Fletcher, Sorensen, extensions of A Zone and Western Flanks, all of them are repeating that pattern. This is a tried and true relationship at Beta Hunt, and one which we expect to continue. So when it comes to that 50C nickel trough, which is really the first virgin nickel discovery, nickel resource under Karora. Remember, the operation was a nickel mine for 35 years prior to us coming along. So that's south of the Gamma Fault, and that 50C nickel trough area, you're absolutely right. We did drill gold underneath it. In fact, we hit 4 meters of 40 grams. One of the advantages that we have at Beta Hunt is almost all of our drilling is dual purpose, particularly when we're at the top of these shear zones where you find those nickel troughs. Often we'll pierce through the gold on the way to the nickel. So you end up getting 2 different sets of assays in the same hole. And that's exactly what we hit when we discovered the 50C nickel trough, which of course is now very substantial in size. So that relationship will continue. There's lots of upside to come from a nickel perspective. Basically everything south of the Gamma Fault, which is 3 of the 7 kilometers of strike that we have at Beta Hunt, is completely unexplored for nickel, obviously with the exception of our current resource. And there's a surface drill hole that's close to that resource, about 400 meters away. That was about 10 meters of 11% nickel. So really, really high grade nickel there, which is fantastic. What we have in a resource today is 2.7% nickel. A key, important factor for us is we have no arsenic in our nickel sulfides, which is very, very important from a processing perspective. So high grade nickel with lots of exploration upside to come. Switching over to the gold side of things, we did put out a great update in November as well on the nickel resource growth over the course of the year. But we've been steadily investing ever since we wound down those royalties with Mavericks in 2020. We've been investing heavily into Beta Hunt with the drill bit. That's both for drilling and blasting or grade control drilling, as well as resource expansion drilling. And we have tremendously expanded this resource base. If you go back 4 or 5 years, there's about 400,000 ounces in combined M&I plus I. If you look today, we're about 2.7 million ounces, and that's net of about 500,000 ounces mined over that period. So it really is a very, very large system. What's even more exciting, and this is, of course, I direct your listeners to the website going to our presentation here, where you'll see a plan view of Beta Hunt and all these different shear zones. Most of our resource, and I'd say about north of 90% of it, is hosted in Western Flanks and A Zone. Those are the 2 primary shear zones or deposits that we've been mining for the last several years. Western Flanks really is, the engine room of the asset. That continues to grow. We've expanded those with every resource update, and we did again in the latest one. But we also have these other shear zones that are starting to come into the picture. So Larkin made its first entry into the resource last year, and this year grew a little bit. We also have initial contributions from Mason and Cows Hill. Very small at this point, but they're looking like the same size as Larkin in terms of strike potential. So we have 2 more shear zones coming in there. And then, of course, without a doubt, the most exciting new addition over the last, call it 18 months, has been Fletcher. Fletcher is a new shear zone which sits parallel to Western Flanks. We know it's over 2.2 kilometers in total potential strike length. We have drilled off the bottom 500 meters of Fletcher. The initial discovery hole for Fletcher, and when you talk about dual purpose, we were actually drilling off the north end of Larkin, but continued on the other side of the Alpha Island Fault this time, and ended up going into Fletcher, where we expected to hit it. Our initial discovery hole had 46 grams over 7 meters in it. That is, without doubt, the best drill hole that's been drilled under Karora's tenure at the Beta Hunt mine. Obviously, historically, there were 1 or 2 holes that went through some coarse gold in the A zone, particularly around the Father's Day vein. But outside of that, and under Karora's leadership, that's the single best drill hole we've ever had. And we are extremely excited about the potential of Fletcher. As I mentioned, 500 meters of that strike length has been drilled off. We'll be working that up into a resource estimate that will go out with next year's update. So towards the end of next year, you'll see Fletcher come into resource for the first time. And that is a major source of growth. Look, we can't project these numbers at this point in time, but suffice to say, it has the same strike potential as Western Flanks does currently. And of course, all of these shear zones that I've talked about are still open at depth. So I think that 2.7 million ounces in resource combined, when you talk about all three categories, and typically you don't do that, but we are for the purposes of this conversation, that really is just the beginning of Beta Hunt, and expect us to continue to expand that for many years to come.
All right, Oliver. So it sounds like lots of potential to keep growing the Beta Hunt project overall. And as you mentioned, historically, the A Zone Western Flank were the ones feeding the beast, but now Larkin's in there as a big contributor. And as far as the Fletcher Shear Zone, yeah, that's been one of the exciting discoveries the company has made, and you're going to continue to expand that. Can you tell us, just on the exploration side, what will the rough budget be for this year? Do you have a general strategy? Where will most of the focus be? Will it still be at Fletcher? Will some of the other targets come into play? Just give us a quick exploration snapshot as we move into this year, 2024.
Yeah, absolutely. So over the past several years, we've spent anywhere from about 15 initially, and these are Australian dollars, $1 million, all the way up to 22, $23 million, averaging around that $20 million a year. About 80% of that's going into Beta Hunt the last couple of years. And there's a very clear reason why. Obviously, the proof's in the pudding. You've seen the resource numbers that have come out, which have been, fantastic growth on top of, or I should say net of, the mining depletion each year. So as a reminder, we mine all those ounces and we add more ounces to the mine life, which is great. But one of the reasons why those dollars are really going to Beta Hunt is from a return on invested capital or ROI perspective when it comes to where we want to spend our dollars. At Beta Hunt, you're able to drill off a shear zone, and within 18 months, we proved this at Larkin. From the initial discovery hole through to our first resource and initial test mining, it was 18 months at Larkin. So that is just an incredibly high return on your dollar. It's the epitome of a case where $1 gets turned into $4 or $5 very, very quickly. So Beta Hunt just keeps making the case for more and more drilling. In 2024, we're looking to add a fourth drill to Beta Hunt. We currently have 3 drills at Beta Hunt, and that has been limited not by drilling dollars. It's actually been limited by the ventilation that we've had underground at Beta Hunt. Basically, we're growing this asset, requires more ventilation. We did put that in over the course of 2023. So now those shackles have basically been taken off from an exploration standpoint. In terms of where we're going to be focusing our drilling, Fletcher is absolutely the priority for this year. Of course, we'll continue to extend Western Flanks and A Zone. Those are the 2 engine rooms, as I mentioned before. Larkin will see more drilling. We put out some exciting drilling just a few weeks ago on Mason and Cowsill as well. Those are looking to be quite high grade as well. So those 4 zones, I would say, are the priorities from a gold exploration standpoint for Beta Hunt this year, and expect the budget to be in that $20 to $25 million range in terms of Australian dollars, with about 80% of that going into Beta Hunt.
Well, and this is more of a high level thought process here, Oliver, but when I look at the success that the Karora team has had over the last few years in growing production, growing revenues, growing cash flows, it's because you've been able to continue to find new areas, mainly at Beta Hunt. You did bring the Spargos deposit into production as well over the last year. You've also still got the contribution from the Higginsville operations. But from a big picture standpoint, I guess back up the clock, walk us through the growth the company's had over the last couple of years, and how do you extrapolate that out? Do you continue to see growth in the future? And if so, at what rate can you keep growing at the rate you have been the last few years?
Yeah, it's a good question. I mean, I think what we've very clearly laid out over the last several years are milestones and targets, and then we deliver those milestones and targets. And 2024 is going to be no exception to that. So as I mentioned, we'll refine our guidance in the early part of this year, and we'll set out those targets for 2024. Ultimately, the target at the end of the year certainly has not changed. We need to get Beta Hunt to 2 million tons per annum. We did about 1.4 million tons in 2023. We'll do about 1.6 to 1.8 million tons in 2024. And then from 2025 onwards, we'll be at that 2 million ton per annum rate. And potentially we can move even beyond that. When you look at some of the rates that we put out on a monthly basis, over the history so far, we've had some months that have been over 100,000 tons. So you extrapolate that, and you're doing more than 2 million tons per year from Beta Hunt alone. So certainly is a large operation. That's where our focus is clearly spent and squared off. When it comes to the other assets, when it comes to Spargos, to the Higginsville assets, one of the key things to remember is Higginsville in particular, as Spargos as well, of course, that was a great open pit. We mined about 40,000 ounces out of there. As a reminder, we purchased that for $4.5 million Australian. So it was a good transaction. Those operations have been absolutely critical to get Beta Hunt and to get the business to where it's been today. The steady state production out of Higginsville from multiple pits and undergrounds has been the cash flow engine alongside Beta Hunt that's really been allowed us to fund this expansion underground. It has been a major expansion. Look, we spent north of $100 million last year. So it's not cheap, and it's something that certainly is definitely being rewarded with some of the headline numbers that we're seeing. So those assets have been critical. As we move forward and as Beta Hunt continues to ramp up in terms of our available milling capacity, we have about 1 million tons per annum at Lakewood, and we have 1.6 million tons per annum at Higginsville. Beta Hunt will be chewing up more and more of that tonnage capacity. So Spargos and some of the Higginsville operations, some of these smaller open pits will still be contributing, but are kind of being phased out from an overall tonnage and ounce perspective. Spargos, as we mentioned last year, is an asset we're looking to go underground later in 2024. It'll be a small contributor going forward, nevertheless, some high margin ounces, which is great. And then Higginsville, we have a series of these open pits and stuff ahead of us as well that we'll continue tackling. Where Higginsville becomes quite interesting is really from a regional exploration standpoint. It is, as we mentioned many times before, we have the largest coverage of the most prospective gold belt in all of Australia under our ownership here, and almost all of that's at Higginsville. Over 1,800 square kilometers at Higginsville alone. There is a very long list of targets to drill off there. As we've been expanding Beta Hunt and growing our resource base and deploying capital into it, we've had to basically be selective with our exploration budget. Would we like to have $50 million a year to spend on exploration? Absolutely. But the reality is we've had about 20. And as I mentioned before, Beta Hunt has really made the case for gobbling up as much of that 20 million as it possibly could. As we ramp off of the continued growth spend in 2024, we've got the ventilation in place, but we need to bring in additional equipment. We need to develop additional development for these stopes to ramp up that tonnage rate to meet future milling demand. As we ramp off of that in 2025, we'll have more cash flow and free cash flow available for exploration, regional exploration at Higginsville, I should say. And that's where we'll start going after some of the bigger prizes that we're quite excited about at Higginsville.
Well, Oliver, that's a nice recap of all the different initiatives the company has going on at multiple projects. One other question I wanted to squeeze in here. A slide you have in your deck that discusses the carbon neutral aspect of the nickel portion of the production. It's something that speaks to the ESG themes, not just in lip service, but in reality. So walk us through that part of the production profile just as an added kicker for Karora Resources.
Yeah, so one of the things that we've been focused on over the last couple of years has been, changing investment themes, particularly when it comes to some of the world's largest funds, from an investment standpoint, but also from employment and attraction or recruitment and retention basis. Obviously, we're all aware of the energy transition and what's going on globally. There is going to be significant nickel requirements for that, and we wanted to position ourselves as not only one of the select choices from a carbon neutrality perspective for certain investment houses, but also for people to come to work. And being part of the battery value chain has been something that's helped differentiate us from other gold producers in Western Australia. There's a very competitive labor environment there, so we've definitely been able to attract certain talent based on that. We are Scope 1 and Scope 2 carbon neutral. We're evaluating a whole but a variety of different alternative power options, which we'll be updating everybody on in 2024, which is quite exciting. Basically, these are things that can kind of happen hand in hand. You can reduce your operating costs at the same time as you can reduce your emissions and associated cost of carbon, at the same time as attract and retain younger people in the workforce that want to be part of an impactful company that's helping to drive this energy transition. So really, they kind of go all hand in hand, and of course, attract investment from ESG related funds. So that's an initiative we've been proud of the last couple of years, and we'll continue to drive forward and continue to be a leader of in the space. And one of the interesting things, beyond all of what I've just said, is we've had quite a few other of our peer companies, kind of knock on our door and ask us about what we're doing in that space and give them some recommendations. So certainly a transition we've been proud of being involved in over the course of the last couple of years, and something we'll continue doing forward. I'd actually just layer one more thing on top of that in the general sort of theme, and that, of course, is our lithium spinout. So last year we announced the spinout of Kali Metals, which is our lithium interests, along with Kalamazoo's lithium interests, into a new separate vehicle called Cali Metals that was externally funded in December via an IPO raise, which was heavily oversubscribed. Look, we all know the whole lithium space has seen spodumene prices and lithium carbonate prices come down, somewhere in the order of 50 to 70%. So it's been a tough year for lithium. But what's really interesting is hard rock lithium is certainly alive and well in Western Australia for a lot of regional and global logistics purposes. So there's a strong market for it in Western Australia. We now have exposure to that on our own property via the Cali Metals vehicle for our shareholders, and that will start to trade here in the next couple of weeks on the ASX. So stay tuned for that. But it's also another way that we're participating in the whole sort of energy transition and battery metal space while making sure that management's time and energy and our resources are focused on growing our gold and, of course, our nickel production at Beta Hunt.
Yeah, great point there on the exposure that investors also have to the lithium tenements and exploration, as well as the carbon neutral angle of the business. And that's going to become more and more important, not just for which funds can position in certain companies, but as you mentioned, the employees that want to go to work with the companies want to know that what they're doing has an impact. And so, just as we wrap up here, Oliver, the key news that you want investors to keep their eyes peeled for as we roll into 2024.
Yeah, absolutely. So obviously in the next few weeks here, we'll be putting out our production numbers for the fourth quarter, which will wrap up from a production and cash perspective, what we accomplished in 2023. Then in February and March, we'll be announcing our full year results and 2024 guidance. As I mentioned, we've got some interesting things going on with respect to power options across our assets. So we'll be updating on that. And then certainly not the least of this is of course, is some of the really exciting exploration that we've got going on, this particularly Beta Hunt and in the Fletcher zone. And both in gold and nickel, we should have some interesting results in the first couple quarters this year.
Well, we'll keep following along and get you back on the show to give us an update, Oliver. But I appreciate you spending some time with us here today on the KE Report to give us an update on all the different work the company's doing operationally, development-wise, and on the exploration front. If people do want to follow along with Karora Resources, definitely click on the link below this interview. It takes you over to the company news section. And as always, Oliver, looking forward to our next conversation.
Absolutely. Thanks, Chad.